Oh, good morning. Welcome to another video presented Dornbush Partners. My name's Michael Doherty, and with me Dan Marks.
Hello, Michael.
And Dan, you've been a busy boy the last couple of days. Smaller Companies Conference.
Yeah, mining 2014, Michael. Really interesting. The first session of these conferences is always good because you get the big picture from economists and different commodity houses, and they come up with some good results this year.
Yep. Anything of real interest, or anything that they've got in mind as the next big thing, so to speak?
Well, the next big thing from commodities and smaller companies, it was very interesting, Michael. Westpac were there, they were presenting. The big thing I got out of the Westpac was that 2016 they're really thinking rates are going to start to hike, and that's going to affect, well, most commodities markets and the share market in general, late 2017, early 2018. So, perhaps that's the one to look for the next downfall or downturn in the market.
Yep, certainly. I mean, things have been pretty cheap in that space, haven't they? The last few months, really.
The smaller companies, It's quite interesting, Michael. 750 junior resource companies listed on the ASX, but in the last 20 years, they've accounted for 60% of the non-bulk discoveries. So.
Okay, yep. No, there's got to be some sleeping sort of giants out there.
Sandfire was one, wasn't it?
Absolutely. Yep. Any commodities of preference, or any growth forecast for any of the base commodities?
It's very interesting, Michael. From 2007 to 2013, aluminium grew by 4.6%, and they think that'll grow from 2013 to 2030 by 5.5%. But the big mover there, I think, zinc, it accounted for 2% of compound annual growth in that 2007 to 2013 period, 5% now, and they've come out and put a price target of $4,000 a tonne on that. It's currently trading about 2,250 odds. So
a fair bit of room to move if the moons are in alignment.
Yes, if the moons are in alignment. And it's funny too, you see these smaller companies now, and all of a sudden where zinc and lead wasn't a focus, but that's starting to come into their presentations. We do have zinc and lead. So.
Yeah. Hopefully, it might be the start of a bit of a resurgence in that sector, because it's been bloody tough going there.
It has been very tough.
The last year or so.
Yeah.
I guess certainly too, Dan, of course, we've seen a couple of the big banks come out with their numbers. The NAB yesterday, pretty solid figures, 5.2 billion, I think, the cash profit for the year. Didn't shoot the lights out, but certainly
it's
what the market
solid,
expected.
Isn't it, Michael?
Absolutely, 99 per share dividend.
Yeah. ANZ this morning.
Yeah, ANZ this morning, 7.1, I think it was, 7.1 billion.
Profit,
Yeah, a little bit higher than Bloomberg consensus.
Chicken feed, really, isn't it?
Oh, mate, walk in the park, absolutely. 95 per share dividend, which is a little bit higher than market expected.
Yeah.
Common equity Tier 1 ratios were pretty solid as well, 8.6 and 8.7 respectively for the two.
Yeah. But just on that too, with the new changes with Basel, have you noticed that banks now want 30 days notice if you want your term deposits back?
Yeah, that's right. Yeah, term deposits, 31-day sort of minimum lockup, I suppose, before you can get it out. So, there's going to be a few changes there on the win. They're not going to be quite as accessible as what we're used to.
Right.
And yes, of course, we've got the Murray review coming through in November, having another close look at the banking sector.
What do you expect out of that, though?
Going to be pretty similar to the RBA's thoughts, their financial stability review, basically alluding to, banks needing to hold more capital.
Yep.
Murray's going to come out with pretty much the same sort of thing.
Sort of story. Yeah. And our banks are pretty well capitalised now, though, aren't they, compared to the rest of the world?
Absolutely, yeah. Our banking system's still one of the strongest out there. Banks ticking along pretty well, and investors should be pretty happy.
Especially with the yields.
Absolutely, dividend yields are probably still the key for banks. Getting a good dividend through, a bit of share price growth. Macquarie also reporting pretty strongly as well. $680 million for the half year, only their half year results. Dividend a bit soft at $1.30, but
how's the franking on Macquarie now?
Oh, must admit, I'm not too sure, but it's usually pretty ordinary, unfortunately. But good performance fee generation for Macquarie, so they're starting to get that annuity-style revenue coming flowing back through again. Yeah. Certainly still some value in banks. Bit of time to buy in before they go ex-dividend, so well worth a chat.
Well, it's quick, isn't it? They'll be going ex-dividend, what, the end of next week?
It is, yeah. Quick turnaround time. So if you're after some divvies, some franking credits, it might be time to pick up a few banks.
Very good.
Well, that's it for us.
Yep. Next week.
See you next week.